everyone. Thanks everyone for attending tonight and taking your time out of your busy schedule to listen in. We have actually, I'll share a screen to kick off. We have got some slides that I'll be talking to. Please stay on mute if you can, that'd be great. Okay, I'll let you quickly look at my my background there. I have been in banking for a good part of 34 years of my life, and my background is in chartered accounting. But in my banking career, more particularly, I have had quite a lot to do with the Reserve Bank and APRA, who are regulators for banks. And in those senior roles that I have held in banking, I have been the key liaison with regulators like APRA and been on a lot of industry committees. So hopefully today I'll be able to give you my inputs and insights into where I think the property market is going in general. But more specifically tonight, we are going to talk about the Adelaide property market. Why Adelaide? Because we have had significant level of inquiries on properties in Adelaide. There's a lot of people, and as you can see from the registrations today, we had actually got close to 100 registrations for tonight. Because of that interest, I want to give you some insights in Adelaide and show you some projects that we have. And hopefully you'll find today's session useful. We will leave sufficient time at the end for questions. And hopefully we'll be able to answer most of your questions today. Okay, first and foremost, we all know the history of what property prices did in the 12 months to 31 December, but also this is a chart for 12 months to 30th of April 22. So latest numbers. So when we look at the annual numbers, we are talking about 12 months. Adelaide and Brisbane have had stellar performances continuing into this year. Okay, still strong. Whereas you will see that some of the other cities are actually coming down. So nationally, the market is showing signs of some cooling after a very strong year in 2021. However, Brisbane, Adelaide, and some of the regional areas as well, okay, combined regional, you can see there, are bucking the trend. So there is still significant demand in particularly these two large cities, Brisbane and Adelaide. So we will talk more about Adelaide shortly, but what's making headlines? So in the last few days and weeks, and even today, what is making headlines in terms of the economy? There is a lot of figures coming out, but also there is a lot of talk because there is elections on Saturday, and we will find out what our destiny is after Sunday. But one figure that came out yesterday, there was a lot of talk about the Australian wages growth, 2.4% annually, which is far below the inflation. Inflation is running at 5.1. We will talk more about that shortly. Australia is facing a national rental crisis. Okay, this is something I have been talking about for the last 9 months. And I have been telling everyone that we will go below 1% nationally. We are there now. And I've been saying that in major cities like Sydney, we will be going sub 1%. So that is coming up too in Sydney, but places like Adelaide and Brisbane and Perth, they're already facing a major rental crisis. Labor figures, unemployment came out today. So we are at 3.9%. As Como has said a number of times during his campaigning, we are heading to 3.5. Already 3.9 is at 48-year low, which means pretty much everybody in this country is employed. Okay, more Australians are in work now than ever before. You've all heard about the cash rate going up by 25 basis points. A lot of hype about that in the media. We will talk more about that in a minute. You've had some new policies that affect properties come out. Each party has come out with some coalition, announced the super home buyer scheme, and that's interesting because it does provide a boost to first home buyers. And of course, there is another campaign by the Labour government as well. So we won't talk about this, but specific schemes. We'll talk more about the market in general and the economy. And then there is obviously a lot of talk about shortage of labor, wages pressure, and need for more people coming to this country. So you will see obviously more influx of people coming in, more migration, students are coming back, and so on. So in terms of property, and this applies to pretty much all over Australia, and these are my top 7 factors that actually moves the needle when it comes to prices of property. Okay, number 1 is economics 101, supply versus demand. Like any other commodity out there, when you have a high level of supply and a low level of demand, guess what? Prices are going to come down. When you get a low level of supply and a high level of demand, prices are going to go up. It's a very simple equation. Okay, it has happened. You have seen through COVID. This has happened to when there was demand for cars and no cars were coming. Secondhand car prices actually shot through the roof. So all of these things are, supply and demand is my number 1 and the most important factor when it comes to property prices. So you hear a lot about interest rates, and that's my number 2. Okay, it is not the only factor that moves property prices. So what analysts do is they look at what is happening with the interest rates going up 0.25%, 0.5%, 1%, 1.5%, 2%, which is where we were before. We were all paying. If any of you listening tonight who had a mortgage before COVID started, your mortgage was at 4% to 4.5%. At some point in the future, we will get back to those rates. You cannot be at 2% forever because that was a short-term phenomenon. It was caused by COVID. But the way the media is making out with interest rates right now is doom and gloom. It is not doom and gloom, trust me, okay? The other factor is affordability, because as rates went down, affordability increased, and that caused a higher level of demand, and supply was already short in the market. So that caused, these 2 factors together caused prices to go up as it did. But I don't want to dwell on the past. I want to talk about the future. Inflation is very important. Most of you probably never heard of the word inflation for the last 12 months, but suddenly it has spiked. It has spiked to a level where the Reserve Bank had no choice but to start the tightening process. Okay, wages growth a little bit subdued. They wanted wages growth to be a bit higher on an annualized basis than what we just saw at 2.4%. We want to see it higher. It is not as high as inflation, but again, media is making a lot of noise about it, and we all want to see some more wages growth to happen. These 2 things together makes the Reserve Bank actually move. Okay, so when the first Tuesday in June comes up, you will see interest rates go up again. Whether it is 25 basis points or the media is talking about 40, I don't know why they get 40, or indeed 50 basis points, any of those 3 figures are likely. I think with the wages growth being a little bit lower than expectations that came out today or yesterday, we might actually see only 25 basis points, but time will tell. Then there is regulation, APRA, and banking lending policy appetite. APRA is the regulator for banks. They decide on things like lending policy. So they set a buffer. They have set a buffer at 3% at the moment. So if you go and ask for a loan and the variable rate is 3%, APRA has instructed banks that when they work out your ability to pay your loan, they have to actually use a 3% buffer. So when they are assessing you for your loan, they're actually working it out. If it's 3%, you're working it out at 6%. Okay. So that's why you don't believe the media when they say there's going to be a lot of defaults. There won't be defaults because the banks are already using their prudent method of working out your ability to pay and service a loan at a 3% buffer. So if rates go up by 1% or 1.5%, nothing is going to happen. Trust me. So banks' lending policy and appetite is very important. Some of you may know that the big 4 banks in Australia, who make up 80% of the residential mortgage books, they've got the monopoly pretty much, 80% amongst the big 4 banks. 50% of their assets is actually in residential mortgages. The bread and butter of banks' money-making machine is residential mortgages. They have significant appetite to land in that space. As interest rates go up, you will find even more competition and others offering better rates. Some may not increase the rates as quickly or offer better fixed rates to lure you in. So banks will lend more in this space than they will do, for example, in commercial space or to small businesses, because they are the areas where they have had write-offs, where they have had COVID impact, but residential mortgages will remain bread and butter for banks. Okay, so this APRA are probably done in terms of their regulation. They will now rely on other factors to see how the market pans out. APRA's main concern was the heating of the market. The market heat has actually come off, and you can't sustain 25% increase and then expect it to go up another 5 or 10 or 15%. When you have a 25% increase, normally you will see a 5% correction. And that is what in certain parts of the market we are seeing at the moment, okay? So the bank's lending policy is strong, and you need this number 3 to be working in harmony to make sure that we have a robust property market. From an economic point of view, the recession that we had for a short time, when we came out of that recession, most of that was because of the investment we have in infrastructure and the construction industry, which employs a significant amount of people. There was a lot of money being spent in that space. So it is very important, and the government knows that the builders and the construction industry, they need to be booming, and they need to be working to keep unemployment low and to keep making sure that we are progressing and growing our economy. Next one is the GDP and unemployment figures. If you want to measure ScoMo on his performance over the last 24 months through COVID, you know, he wins with flying colors, because the GDP is growing, and we avoided a recession, and unemployment is at, you could say, historic lows and heading lower. So these two factors alone are very good indicators, and the two factors that actually have a huge impact when it comes to price movement for property. Okay, so these two figures are in check, because I won't go through the history again, because of the JobKeeper, Job Seeker, because of all of the incentives that they gave and all of the work that they have done to help small business and keep people employed. Keeping people employed is the most important thing if you want to avoid property prices going down. Australians, generally speaking, in my experience of 34 years in banking, I can tell you that Australians pay their mortgages. I have sat in risk committees and executive committees of banks for many, many years, okay? And I can tell you that this number 6 here, which is to do with loan write-offs and delinquencies, this is where people don't pay their loan off. 1 month they miss their loan, 2nd month they miss their loan, 3rd month they haven't paid their loan. They're on what we call a watch list. In banking world, we call it a watch list. And then if it goes 4 months, it starts becoming what we call a worry list. That's when banks start to worry. And then they'll knock on your door, and the next thing is they will sell your house in a mortgagee in possession sale. I can tell you that mortgagee in possession sales in Australia, you very, very rarely will see. And even if you see one in today's market, you might set a record for the street when it goes to auction. So listen, it is not something that we need to worry about. So property prices might have a slight correction here and there in certain markets. I say to people that in a city, you don't have a single property market. You have 15, 20, 30 property markets, say in a city like Sydney. So not all properties and not all property types or values behave the same way, okay? And then number 5 is very important. The government is going to spend a lot of money on infrastructure, on incentives, and so on. This is being done in every state in Australia. This is the best way to come out of a recession. This is the best way to come out and get into a recovery, and the best way to grow GDP, okay, and keep unemployment in check. So all governments are doing this. And then the last one, which has had the biggest impact on us recently, In fact, before COVID and before the war, I wasn't talking about number 7 of mine, but number 7 has become very important because of the war that's going on at the moment. And because of COVID factors, we have had supply chain issues and oil price going up. Those two factors have had a major impact on everybody's cost of living around the globe. Okay, now I'm going to talk a little bit about interest rates now and why it went up and where it's going to go next. So inflation is much higher than expected, 5.1. We only measure it every quarter. So next time you'll hear about inflation will be in July. And that's been caused mostly by global factors, okay? Slightly by local factors because we have had the floods and we've had a increase in fruits and vegetable prices and so on, but mostly global factors. There's supply chain issues, there's oil prices, we know, but locally we've also had things like shortage in terms of properties and rentals going up. These things are all having an impact. Your commodities, your everyday needs, your everyday goods, that affects your CPI. That is inflation. Okay, we are all seeing that. We are all paying for that. RBA's target range, they want inflation to be between 2 and 3%. So if this figure is high and sustainably high, in the UK, it is sort of edging to 9% now. In the US, it is around 8%. These are high numbers, okay, very high numbers. And the RBA, I think, will go slowly on this. But with this type of disparity, they had no choice. Wages growth is picking up. We talked about wages growth. Unemployment, as I said, is heading towards 3.5. It's 3.9 for today's number. And it's a very healthy position for us to have. So it was the right time to actually do the interest rate increase. But given this and the very low interest rate, the RBA had no choice, okay? So we expect another 2 to 3 increases of 0.25% this year. This is my personal view. And you will see us get to 1% cash rate. So generally speaking, the variable rate, see in mortgages, the margin the bank makes, generally speaking, again, because it varies for different types of mortgages and products that you have, generally it's around 2%, okay? So a bank will make 2% on a mortgage, which means that their cost of funding versus, so what the cash rate decides is a bank's cost of funding. That's where the bank can actually go and borrow money in the interbank market, okay? But the bank does not borrow in the interbank market, the overnight market, as we say, and lend you for mortgages. They have to have a more mature book. So it's a 3 months, 6 months, 9 months, 12 months, fixed, right? They are the fixed deposits. They fund a big part of that as well. And then the banks also have what we call lazy money. The lazy money sits there and that's a 2,000, 5,000, 6,000, all those little bits of money that add up to quite a substantial amount for the bank, which people don't manage, which the bank currently is giving you 0.1% interest. But nobody bothers about those, okay? But that's where the bank makes the margin between that and the lending rate. On an average basis, 200 basis points, which is 2%. So we will expect this to happen and we will expect mortgage rates to go up. Is it the end of the world? No, it's not, because as I said before, you were all paying. If you had a mortgage before COVID, we were all sustaining. We just had a 2-year of honeymoon period where we've managed to save a lot of money. I know my mortgage rates all went down and I have got substantial number of mortgages. And I can tell you they all went down and I was having a honeymoon period for the last 2 years. I managed to save some money. So the fact that it's going to go back to where it was, it's not going to break the bank for me or for anybody for that matter. Okay. So do not believe the media on this. We are not going to see mortgagee in possession sales, which is the primary factor that causes prices to go down more than 4 or 5%. Okay. 10%, 20% that these people are talking about, the same people were talking about 10 or 20% or 25% even in mid-2020. That was when I was forced to actually write an article in the paper, and I went against them and said, we will see a 25% jump in 2021. I wrote that article in July 2020, and I can share that with anybody that wants to share it. because I did not believe in all of the factors that they were talking about. And the same thing today. I don't think there is any major correction coming to our property market. Reserve Bank, as I said, pace of growth on interest rates will depend very much on how we can solve the supply chain issues, wages growth, and global factors. So there is a potential for the cash rate to get to 2.5 again, but I think it will be very slow and certainly won't happen in the near future. Okay. So you can see this graph here, which is interesting. So, you know, from about, where are we? From about 2020, January 2020, all the way it's come down. So there's no reason why it can't come back again to where we were back here. Okay. But we have been, you know, I have paid over here. I have my first mortgage was back then in 1983. I took out my first mortgage and I paid 17.5%. That's what you call a high interest rate, 17.5%. Today, when we are at 2, 3, 4%, that is a low interest rate environment. Okay, this just for some trivia for those of you who may not have been in Australia for very long. Last time we had a tightening from 2002 to 2008. That's when we had a last tightening. Prices were up more than 30% in the period, despite the cash rate increasing 3 percentage points, 300 basis points. Okay, this is a reasonably good comparison with the current period, both because interest rates increased quickly and because it was a period of strong wages growth, which we expect to see this time. Secondly, then its tightening finished in 2009 to 2011. Home prices again went up 11% at their peak and then came down to 6.6% at the end of the tightening phase that pushed rates up by 1.75 percentage points. So it is only a myth that if interest rates go up, that you are going to actually see a correction in property prices. Okay, just wanted to demonstrate that point. So now we're back to Adelaide, which is the market that I want to talk about tonight. And I want to give you some insights on what is happening in Adelaide, what is going on in that city, and why I think you need to buy in Adelaide. Okay, so and then we will show you some projects. Now, property prices are up 26.2%, as you saw, for 12 months to 30th April. The median house price for Adelaide is 619,000. Gross rental returns are 4 to 5%. Rental prices are increasing because they have got a chronic shortage in the vacancy. Okay, the vacancy rate in Adelaide is 0.3% as we stand today. This is the latest number from domain.com, 0.3%. This is the lowest vacancy rate in Australia right now. Sydney is at 1.4%, and we will more than likely head this way over the next 12 months. I think we'll be sub 1% in Sydney. If most of you are from Sydney, you'll see sub 1% probably by July, and then it'll start to track even lower. Okay, you can't set demand. It just doesn't happen. So this is some current facts on the property market. Now, why Adelaide? Why invest in Adelaide? What's so great about Adelaide? Okay, first and foremost, Adelaide has recently been named the third most livable city in the world. Now, they don't just do this study and you know, make this assessment. It is a very scientific assessment where they go and look at all types of things like the stability, healthcare, education, environment, innovation, infrastructure. You know, how many per capita, how many tennis courts do we have per capita? What the traffic congestion looks like when you're traveling from A to B, how clean the air is in the place. All those, there's multiple factors that actually decide whether it is the most livable city in the world. And Auckland was first, Osaka has come second, and Adelaide, of course, came third. And that says a lot about the city to start off with. Now, we will talk a little bit more about some of the stuff that is happening in Adelaide in each of these areas. But the other thing is we've seen the highest level of interstate migration to Adelaide for the past 30 years. Okay, they're experiencing as is Southeast Queensland, Brisbane and Gold Coast. Adelaide is also experiencing a lot more interstate migration and interstate buying, as we will see in a minute. Now, in terms of infrastructure, the strategy for the South Australian government is very simple. If you look at this golden cycle, they want to keep a robust economy. They want to build infrastructure, which creates more jobs, which creates more population growth, creates more housing. That's what they call the golden cycle. And this is the strategy in one chart, the strategy that the South Australian government have in terms of growing their economy. Education, so it is home to some of Australia's highest ranked universities. Adelaide is now got a reputation as a university city, comparable to Boston in the US. That says a lot about the city as well. Health, South Australia has become an epicenter for health community, ever expanding health precinct in the heart of CBD. Researchers are helping to develop world-leading research, okay? Breakthrough research has brought some of the greatest medical minds to Adelaide over the past decade. So this momentum is going on. They're building more hospitals. There is a lot more brain drain happening from other parts and going into Adelaide. Defense, we will talk more about in a minute. And the environment, it has got, the coastline is massive, okay? They have got so many beaches there. There's the wineries. There's a lot of leisure and environmental benefits staying in Adelaide. So a little bit about infrastructure. The CBD is getting transformed. There are at least 12 major projects. I'm not going to cover all of them. I don't have time here. But there is the redevelopment of the Riverbank precinct. You've got the Sky City. You've got Adelaide Convention Centre. All of these, funding is going into all of this. The Riverbank area, if you haven't been to Adelaide, I urge you to go there, because it is absolutely beautiful, okay? I have sat in some of these restaurants and overlooking the water and really enjoyed myself, because you have a very serene environment and a wonderful atmosphere. So the Central Market redevelopment is this one here. That is a massive development that is going on. And go and Google the Central Market redevelopment and you'll see what I mean. It is a place, it will be going to become the place to be seen in the city. Really happening place, and it is a fantastic development. Now this Torrens to Darlington Highway project, there's a 78-kilometer non-stop motorway connecting the north all the way down to the south, okay? And Adelaide CBD is here. This is a massive project. This is one of the biggest road projects that they have ever taken up in Adelaide. Now there is this part in the middle here which is being developed, and you can see some of the pictures here. And that is a 14-kilometer project, $9 billion project, where you're going to have 14 kilometers of tunnels and other things to connect the north to the south. This is a major project that's going on. It's going to create a lot of jobs. It's going to inject a lot of money into the economy. As I said, I'm going to talk in a few more slides, a few more things about all of the things that are happening in Adelaide. So the innovation is very important. The state's growing international reputation for innovation and technology. So world has noticed that they have got this thing called Lot 14, for example. Okay, it's a precinct. So this building here, again, I would like you to Google and see what Lot 14 is and what Tonsley Innovation District is, because I can't do justice in 1 minute of showing this slide. But these are attracting companies like Google, Amazon, MIT, Deloitte, PwC, Accenture, the Australian Space Agency, all opening up in Adelaide and all doing research, development, and cutting edge work in that city. So there is a lot of professionals that are being attracted to the city on the innovation side. Then we all know about the $80 billion submarine project that's going to create 4,000 jobs. That is happening at this Osborne Naval Shipyard, which already is getting a boost in terms of its capability. They build warships there, they build submarines there. There is a $535 million investment for military capability. There's a Royal Australian Air Force base being built. there's 165 million Adelaide airport expansion that is happening. There is significant amount of infrastructure and jobs being created in that city. Then you can't talk about Adelaide and not talk about the mining industry. When we talk about Perth and Western Australia, the first thing that people talk about is the mining industry. And the reason why the Western Australian economy is doing so well, and the Premier there is gloating about it, is because they have mining, okay? And the iron ore prices, as we know, has gone through the roof. So mining is keeping that economy going. Mining is what is caused the property boom in Western Australia and Perth in the first place. So people don't realize how many big mines we have in Adelaide, okay? I don't know if you've heard of all of these down here, but I will just mention a couple here. The first one I'll mention is Olympic Dam expansion. That is massive. Olympic Dam, I've got another slide, so I'll talk more about that. And then you've got Woomera open to mining. There is massive worth in these mines in South Australia. Okay, now Olympic Dam. So Olympic Dam, if you haven't heard about Olympic Dam in the past, these things are important to the economy. And when the economy is strong, it boosts your housing prices. It brings the right type of people into that economy. Okay, so the Olympic Dam is known firstly for the uranium. You need uranium to make nuclear, okay, to run uranium power to make nuclear weapons. All of those things require uranium. Guess what? Olympic Dam, this is the world's top 20 deposits of uranium as of now. Olympic Dam that is the graph. The second is down here and the rest come all the way down. This is the top 20 in the world. So we have by far the biggest. Olympic Dam is not just known for the uranium. Okay, once completed, the construction and expansion and everything else that is happening there, it'll be the world's largest open cut mine. It is, as I said, the world's largest source of uranium. It's the biggest gold resource in Australia. It's the 5th biggest gold resource in the world. It's the 4th biggest copper resource in the world. And most importantly, it has a commercial life of over 200 years. Okay. So I talked about Women's Hospital. Here's another 1.9 billion Women's and Children's Hospital that is coming up. This is a big project. There's a large rubber manufacturer that's moved from New South Wales to Adelaide recently because of cheap labor, because of incentives from the government and so on. There's large-scale thermal energy storage happening at Port Augusta. There is significant, I mean, I don't have enough time to talk about all the infrastructure projects, but that gives you a snapshot of what is happening in that city, okay? There is significant emphasis on innovation and infrastructure. Now, why is it a great buying opportunity? What is happening? And this is probably true for most markets in Australia, okay? And so I will just talk through very quickly. We're still in a historically low interest rate environment. And there is, as I said, high appetite for that. The demand will continue to be strong because of migration. We got returning expatriates and students. And keep in mind, Adelaide is very big for overseas students as well. Investors, a lot more investors are coming in. Excuse my Sydney there, it's come from another slide. But investors are still coming back and they are looking for positively geared properties. And Adelaide presents extremely well for positively geared properties. And there are still a lot of places now where it's cheaper to buy than rent. But you're going to find that despite the interest rate increases, that because rentals are going to go up even further, that this phenomenon will become more prevalent for investors. Supply is significantly down. Now we are finding we've started to sell in Adelaide, and we are finding that you have to be so quick that if you don't act within not days, within hours, the property is sold. Okay, so supply, the demand is so much higher than supply at the moment that we are having, that is our biggest difficulty. Okay, so you can read that faster than I can say it. And then I've got 8 factors here. Okay, cost of construction is going up. Cost of construction is already gone up. Can it go up even more? Absolutely, it can go up even more. And that is Excuse again the heading there. But the point here is Australia-wide, because of supply chain issues we have had through COVID, the cost of construction is heading up and going higher. Rentals, we will talk more about rentals in a second. FOMO effect, people who have missed out. So you've seen Adelaide has already gone up 25%. Now, if those that are thinking that, okay, I can't afford a house now, I should buy something. So if they were looking for a house for $800,000, $900,000 million, and they can't afford it now, for whatever reason, they will go and buy a property that they can afford. So FOMO effect is going to be very prevalent. The other thing I will say is, and I haven't mentioned it when I was talking about interest rates, is that if interest rates go up by 1.5% to 2%, the price point where you will have the least impact of the interest rate. Okay, so interest rate is like the biggest headwind. Then you've got these 8 factors which actually offset that headwind. It is not one factor that affects the property price. Okay, and what I'm saying is that area of 500, 600, 700,000, even 800,000, that price bracket will be the least impacted by interest rate increases. Okay, least impacted. And then you've got consumer confidence and business confidence. Both are at pretty high levels right now. People are employed. People have security in their jobs. So that brings your consumer confidence up. That makes you want to go and buy a car and want to buy a new TV, do expansion in your home, go and buy an investment property. That is consumer confidence. It is heading higher and higher. Okay, business confidence is high. They're employing people. That's why unemployment is so low. They're investing in their businesses. Okay, so with this high, you know the economy is going to be robust. And we've talked about the infrastructure spend. Now I need to show you this latest chart, April 2022. You can see the vacancy rates here, and it came from April to March to April 22. 0.3%. It's the lowest in Australia. This is at chronic levels. Okay, absolutely chronic levels. We are here and we are already feeling the stress and pain of having to find a rental property right now. Rentals are going up. In places like Sydney, you will find rentals will probably go up 25% this year. The cost is going to go up. Adelaide, to find a rental property at the moment is impossible. You can't find a property at 0.3%. This is chronic shortage. This is like saying there is no properties to rent. So what do you do next? You can't sleep on the street, even though some people are. So this is a very important thing that I have been saying now. If you have been listening to my talks since August last year, I have been saying every single talk since August last year, I have been saying we're going to reach chronic levels by middle of this year. I've been telling people to go and lock in their rentals for 2 years at today's rate. That was last August, because I could see this happening. Okay, I could see this happening. The chronic shortage happened because in 2020 and 2021, we were right in the middle of COVID. And right in the middle of COVID, nobody was constructing. We were not thinking about constructing at that time, whether it's apartments or houses. So there was a shortage. They could not release land as quickly because people were at home worried about their lives. So that has caused a chronic shortage of properties. And now we've got the border open and people are coming through in droves. So that's what's causing this, okay? That's what's causing this. So this is the simplest graph I've got today. When you've got economic growth, when you've got jobs growth, when you've got wages growth, when you've got population growth, you're going to see increased rental and buyer demand. What will that do? It'll increase property values. Trust me, interest rate alone is not going to dampen the property market. It will not. Okay? Do not believe the media if you want to invest in property. They get it wrong all the time. Media only tells you something that they want to make headlines on. They're not going to tell you what I'm telling you today, because the reality is we are at the coalface. We see this. We know the market better. Now, when you're buying a property, you must always make sure that you are in tune with these 4 factors. Firstly, location is important. You've got to pick a suburb and a city where there is all these things happening. Infrastructure, I've already showed you a number of charts: roads, metro, hospitals, schools, staff, colleges, shopping centers. This is important. You've got to make sure there's investments in the local area. If most of you are living in Sydney, so you have seen what has happened in Sydney when you've got infrastructure happening, investments in local area happening. Northwest and southwest of Sydney, the growth that has happened, okay, it's not been 25%, it's been more like 40 or 50%, okay, in some areas. And then population growth is very important. Secondly, we never in any of our talks ask our people, our clients, to actually spend a premium when they buy a property. You must always buy a property at the right price. You must not pay a premium. It is a big amount of money to spend. You must do your homework. You must do your due diligence. We do that. We will not bring any project to my talks if we are not going to buy ourselves. If we don't believe in the project, you are not going to see it. Similarly, we do a lot of selling interstate. We do a lot of selling in Sydney. We have probably more than 50 projects at the moment, and more than 30 builders at the moment. But we will only show you where we think you're going to get the best value for money, okay? Timing, as I said, we'll talk more about timing in a minute, but timing, there is always a good time to buy a property at the right place at the right price, okay? And the developer and builder are becoming more and more important as well. There was some noise about Metricon today, and I'm sure some of you would have seen that. And they've sort of diffused that by saying there isn't an issue, but we need to be sure. We need to be sure that we pick a company that can deliver. Okay, so after showing you all of those slides on infrastructure, innovation, and what's happening there, and how much billions of dollars are being spent and so on, why should you buy? Okay, why should you buy? Well, if you put all of those things that I just said aside, then and you follow just these 5 things, then these 5 things are important as to why you need to buy. Demand for property in Adelaide hits record high. So demand is going through the roof. The low vacancy rate I have talked about, they're the lowest in Australia. I don't know how they're going to resolve that in the medium future. There is already shortage of land in South Australia. The prices are only going to go one way. It's going to go up. Views per listing, 64.6% higher than this time last year. It's gone through the roof. Now, it's one of the most highly affordable cities in Australia. 3rd lowest in Australia after Darwin and Perth. 619,000. Okay, only Perth and Darwin are lower priced. So Brisbane used to be there not long ago. That's why I have got this. Adelaide is today where Brisbane was 12 months ago. There's more upside coming. When the city is going through so much of development and growth, you are going to see price pressure, okay? So that's where Brisbane was not long ago. Brisbane is now here. And I think Adelaide is about 12 months behind Brisbane. Okay, I will stop there as far as my talk on Adelaide and the economy in general. And I will hand over now to my colleague Raj, who will show you some home and land values that we have selected for you today. And as I said, we only select projects that we really believe in. And Raj, I'll let you take over.
Thank you, Sachin. Firstly, good evening, everyone. I'm Raj. I'm part of the Nivas sales team. Thank you so much for making the time out to join us today. We have got, I must say, we've got record level of interest today, like the registrations are off the roof, obviously, because Adelaide is such a prominent city which is upcoming. So basically, I'm going to talk about the area and show you some exceptionally valued project packages that we have currently. And I'll also talk about a co-living package, which I will explain in a minute. So starting off, we're going to talk about the city of Playford, which we're going to spend some time on the slide. So the packages that we are showcasing tonight, they come under the city of Playford Alive. That's the full name. It's a master plan community. It has a $250 million town center with all your specialty shops, supermarkets, cafes, restaurants, gym. It also has a super GP clinic. So what super GP means that it's got multiple health services, so your pathology, aged care, health services. So it's a combination, and it's about 10 minutes to Lyle McQueen Hospital, which is one of the largest hospitals in South Australia, all of South Australia. Now, this hospital is getting a further upgrade of 58 million, which is due to complete by end of this year. So we are very, very close to that upgrade. So this is about 10 minutes to Broadway train station, 5 minutes to Kodla train station. They are planning an infrastructure in this council to accommodate a huge population increase by 2036. So in a nutshell, currently Playford Council has a population of 96,000. Now that is projected to increase to 136,000 by 2036. Now that's a massive jump of 40,000 people coming in. So this area will gain most from the government spending and incoming infrastructure, right? It has great education facilities. It's got 3 new state-of-the-art schools, private schools. You've got the Playford College, the International College, which it's all within its proximity. Now, moving on to package number 1, next slide. So, so this is where package 1 is located. It's called Monopara. So Monopara is about 45 minutes to Adelaide CBD. It's again part of the Playford Council. It's about 5 minutes drive to the motorway, which you can see up there. So from the spot where the blue line is going, it's literally 5 minutes to the motorway. And then from there, the motorway goes directly to Adelaide CBD. It's about 25 minutes to Port Adelaide, where the defense infrastructure, which Sachin was speaking about, is happening. So what they're doing there is they're building nuclear submarines, which is being built in Osborne Shipping Yard, which is going to attract huge amount of jobs. Now, on the north side, like if you stay on this same slide, on the northern side where you see all the greenish hills up there on the right-hand side, it's about 20 minutes to one of my favorite places, which is called Barossa Valley. So Barossa Valley is one of the largest wine producing areas in Australia. It's equivalent to Hunter Valley in New South Wales. The wines are considered to be one of the best in Australia. They obviously import a lot of stuff too, and they obviously export a lot of stuff too. Now, all of these things are within close proximity to the Monopara. It's got shopping centers, thank you. So it's got local amenities, which is your Woolworths, Coles, Bunnings. Now, these large businesses, whenever they go in and they invest money, they have done most of the research. They know what's happening. So these shops are very key to be part of the community. Now, if we move on to the home and land package, next slide, please. Yep. All right. So this is the first package. It's priced for only $414,488. Land size is 300 square meters. You've got a build of about 164. It's a single story, 3-bedroom, 2 bath and 1 car. It's got 2 living areas. If you see the family room and the living/meals. Most of the inclusions here, mate, it's pretty much we get same stuff in Sydney as well. So you've got timber laminate floors, 2.7 meter ceiling heights. It's got a bench top, 20 bench top, ducted air conditioning, landscaping, fencing, everything is included within this price. The registration for this land, it's a full turnkey package. Yep. So the registration for this land is end of this year. Now, rental for this, now this is obviously a standard house. It's not a co-living package. So you're looking somewhere about 480 to 500 per week for this, which is obviously positive cash flow. If you move, that's one of the packages, the cheapest one that we have. The second one is priced at $494,990. It's located in Angle Vale. So Angle Vale is again within the same, it's literally the next suburb to Monopara. So again, it comes within the council of Playford Alive Council, which, obviously, the proximity and distance to the city. So this one is actually a larger lot. It's 450 meter squares. It's got a larger build as well, 177 meter square, 4-bedroom, 2 garage and 2 bathrooms. And again, it's got 2 living spaces. Now for this, inclusions again are same as to the previous package. Land is registering again end of this year, and the rental is $550 per week. Now these rental estimates are as per currently, but like Sachin mentioned, there is a chronic shortage. By the time your house is built, your rental will be much higher. Now, we obviously don't have a crystal ball, but I'm guessing you're looking probably something at least 10% more than what we are quoting now. Now, we are going to head into co-living. Now, the third package is the co-living, but before I talk about the third package, I want to talk to you about the co-living, how this works. So co-living is a great concept. Basically, it's designed to get maximum rental potential from your property with minimum changes, right? So the purpose is to get multiple tenants in the property, and that will help you achieve premium rental returns. Now, how we do that is in a nutshell. So you get 3 bedrooms, right? So if you look at the 3 bedrooms, we get 3 bedrooms, fully lockable pantries. All of them have got en suites. All the 3 bedrooms come with en suites. It's got a larger kitchen space, more storage, so that each tenant has got a dedicated pantry, right? It looks like a standard home, but it's a little bit slightly different layout, right? It's got large storage areas, again, to cater to multiple tenants. Yep, we can move on to the next slide. I'll show you the plan. So if you look at the plan, this one here, so this is priced at 607,400, of course, because there's been a little bit extra money spent on the build to accommodate the co-living. This is located in Para Hills West. Again, it's a really top location, similar proximity to Manopara. Now, if you look at the layout, so as soon as you enter, so your first bedroom has got an ensuite right next to it, that's obviously part of the plan. Second bedroom has got an ensuite as well, and it's got an external door where you can access it from outside as well, right? So it's got 2 doors, the ensuite. Third bedroom has got a private ensuite for itself again. Now, the fourth area down here, which is called the media room, that can be used as a 4th bedroom, but we have had clients who've actually furnished this extra room and they charge more rent, right? So a standard build is usually, a 4-bedroom, 2-bathroom, double garage. Co-living specs are like 3-bedroom with 3 en suites, 1 media, which obviously can be used as a 4th bedroom. Now, this setup basically allows you to have provision for 3 separate tenants. Now, this is absolutely legal. You can have 3 separate leases for every single tenant there. So what that allows you to do, it allows you to have a dedicated management company that can look after, after the property, any issues you may have. So basically the tenants will share the living space. They will share the kitchen. And obviously, if you want to spend a little bit extra, and if you furnish every single one, it's obviously your option. If you want to furnish the house, you can obviously attract more rent. Currently, without any furnishings, your rental, you're getting somewhere between $750 to $800 per week. So that is absolutely huge, like really, really good value there. One common question we do get is if tenants are going to be comfortable with such an arrangement. And guys, again, in terms of the supply there, you'll be surprised how many people we get asking for rooms. So per room, we are charging $250 per bucks average, right? And depending how far you are from the CBD, that can go up to $300 to $350 per room. And if you furnish a property, you again get higher rents. Another key advantage I want to mention about co-living is that at the time of selling, what happens is you buy it as a 3-bedroom, but when you sell it, you're selling a 3-bedroom with 3 full-size en-suites and potentially a 4th bedroom. So it becomes like a 4-bedroom, 3-bathroom double garage. That will get you a higher selling price. So now another service that we are providing in terms of getting tenants into the property is we can get you tenants into the property. We are running that service. We will find you tenants. We will put them from day one into the rental property. So there is nothing to worry there. We've got access to a large pool of renters. Now, obviously, keeping in mind the time, if anyone has got any other questions, if you want to learn a bit more about co-living, please feel free to reach out to the team. We'll be more than happy to assist. Coming down to the payment terms. So to block, to secure it, you need $1,000. It is fully refundable for 3 days. The reason being is that short is because the land is moving quite rapidly. As soon as anything comes, it just goes within 24 hours. So in Sydney, at an average, it takes about, I would probably say 3 to 4 days, which is obviously reduced because demand has gone down a bit. But Adelaide, we're running out of stock. It moves within 24 hours. So that's why we have to keep a bit of time constraint there. But yeah, so $1,000 to secure it. On exchange, at that time, your contracts will be issued. The bill contract and the land contract, you just need to pay 10% on the land, which obviously land is quite cheap there, so it's not much. Your stamp duty is going to be much, much lower, and it's just 1.5% on the house cost, the build cost, which is one of the lowest deposits. I would say, like, you can't even compare to Sydney. Sydney initial deposits are quite high. Now, registration, like we mentioned, all the packages are registration late 2022. Build time approximately is about 4 to 6 months to be conservative. But again, if there's rains happening, obviously that can vary it. You can add maybe another couple of months if you wish to be conservative and be safe. With these packages, it's not all you can change stuff. Variations are allowed. So in case if you want to put tiles in, that can be done. If you want to increase the size of the build, depending if the land permits, the council permits, you can increase the size of the houses as well. So we've got all these options, quite flexible payment terms, excellent value, all the education facilities there, infrastructure coming in, a lot of spending going on from the government. So it's a great opportunity to get into the market and basically experience some good capital gains in Adelaide. That is where I will stop in terms of showcasing the packages. But yeah, guys. So yeah, thank you, guys.
Thanks. A couple of concluding comments from me, as I always do. So why should you be looking at an investment property? Why invest in property in the first place? And I say to all my listeners, listen, if you think you can retire just on your own home, so if I give you the example of if you can pay off your own home and you have $1 million sitting in the bank account, today that $1 million is going to earn you about just around 1% on interest. Let's say it's 1.5%. $1 million, 1.5% actually gives you $15,000 a year. Okay. So $15,000 a year, none of you listening to me today can live off. So if your house is paid off and you got $1 million, you cannot really retire. It is not possible. So the only way to do it is build an investment portfolio. And when you're building an investment portfolio, you've got to find the best value for you and where prices can actually increase. So you're buying at the low end and you see the prices grow over time. Now, I don't have to go back too far. I used to actually say, if I gave you the option of buying a property at 5 years ago or 10 years ago's price, would you buy it? Well, I only have to go back 2 years now and say, if I gave you a property to buy 2 years ago's price, I don't think anybody will say no. So you know what is happening to the property market in Australia and in these cities. There will be significant growth continuing to happen as we go forward. Property is not something like the stock market. You buy today and you sell tomorrow, or you sell in a week's time or 2 months' time. Property is something you build, and over time, you will generate wealth. Okay, I was talking to somebody. I do mentor people on one-to-one basis. I do not charge for that. I'm here to sort of help you generate wealth through property. I have been doing it for 40 years. I've lived in Sydney, and I can tell you that this is the best asset class to build wealth. The only reason why Australians are per capita the wealthiest people in the world, we've gone past Switzerland, is because Australians have invested in property, and property prices in Australia keep going up. So I would urge you to review what we have got on offer, and talk to whoever has invited you today. And I will put the names and details there for you if you want to jot that down. If you don't have a contact, please contact myself or any of the names there. Krishan, Raj, Nakul, Sanjay, Amrita's overseas at the moment, but any of those people you can contact. And we will now stop there and take questions.
All right, thanks for that, Raj and Sachin.